It should be okay. Great. So thanks also for the charts and the emails again you sent. Great charts. We will discuss everything. I'll just start with the euro. The euro broke the resistance yesterday, so the support line here on the 4-hourly chart and the daily chart did actually hold, and now it looks like the price is heading. Let me just delete some lines here. For the next resistance area, of course, it would be 1.36, 50, 70, 80. This area in extension, of course, later on we have highs up here, 137 area. So this whole area from here and here is resistance. I'll leave it in the middle, 36.80. It's always a good number, the 80 number for the euro US dollar. And of course later on these are the highs here. Before we look for new entries, except of, as I said, the day traders, they probably are anyway, but everybody else has to wait for the setup over that line, right? With other words, now that we had this range, we need to look for this, and if the price reaches 1.36 80 something, we actually need that before we do anything. Okay, on the lower time frames, you can see we had this 1 2 3 here. These are the 4-hourly scenarios. The 1 2 3 here, exactly below resistance, so only with an intraday setup. Let me switch to the 5-minute chart. As you can see, it was a very, just by drawing the line like this, we had crossovers, another crossovers. So actually the 200 EMA again was the guide. This was a 1 2 3, but we had the crossovers to the upside, to the downside again, and that's always a little bit tricky, right? Actually, we don't want to see a crossover to the downside for long setups. Now the thing here in this example, we had a 1 hourly 1 2 3, and we had support, and the 200 EMA was supporting the price. So if that happens, and what do we usually say, if everything is pointing our way, especially on the lower time frames, it's important that we watch closely. But if everything is okay and we don't like one thing, or there's one thing that is not according to our entry rules, right? Then we can kind of ignore it if that's the only problem. And on the 5-minute chart, by using this 2 to 3 line break coming from the 1 hourly, having support in 1 2 3 touches on the 200 EMA, and also a nice 2 to 3 line break candle, so that was a stop of about 10 pips. Having a target in this case about 20 covers the first and second lot, so it was okay to do that. Afterwards, the only setup you got was or retracement you got was to the 12th, and later on almost to the 36. The 36 followed, but it didn't touch, so another aggressive entry actually. And this setups you try to avoid. You could say, look, it went up great. Yes, that's true, but it doesn't work like this every time, right? So if you get a setup like this, you know you have major resistance or range coming from that 1 hourly, 4 hourly chart, you try to avoid entries that close to resistance, because it usually also fires back, retraces more. Okay, maybe that was caused by news, it looks like it, so that made the difference. But other than that, usually you avoid that, right? Does everybody agree with that? So this was a good example for difficult long setup on 5-minute because of the crossover here to the downside. A good example for something like this here. Okay, let's switch immediately to the Australian dollar, US dollar. Yes, shorts are still here on, and this is support. Nothing changed since yesterday actually here. It's still going down. It's trying now. It retraced again. It's trying to move lower. We have our bottom formations here still from the 4-hourly chart. So the price should actually stop here, or maybe if it wants to break it a little bit, touch the 36, but it has to come down. Otherwise, we might get a higher high and higher low, and then for now the shorts would be over, right? So intraday traders can wait for the retracement, a possible bounce, and look again for 5-minute entry, because you still have some room before it's hitting support. But other than that, if you look at it, if you do it in the 4-hourly chart and you have a stop of about 100 pips, it's not worth it, right? The USD yen. Now, yesterday, remember what we said? We might see a lower high. And if that happens and the price breaks the 36, which would make sense because the price moved up like crazy, you could start hedging when you see the break, or using even the 1-hourly chart and doing it there. Yet the lower highs and another one. So the latest entry somewhere in this area probably. And then hedging it up with a small stop, see if you can make it back to the 36. Right now, it is an important area of support, the 12 EMA. If you just look back, the price always bounced on the 12 EMA. But because of that big move, we might see a small retracement or bounce here, and then a bigger retracement. So who did hedge up? Who did hedge this position? Let me check. Jean did it. I think Kathy also did it. Kathy sent me a chat actually, and she could not make it today, so I will show the chart to you later on. Jean also, okay. Great. Perfect, yeah. Send the video, yes, that's great. Now if we check the 5-minute chart after that 1-hourly, let me see, let me just make this. First, you had this lower high, and then this. I don't know which area was best because I don't have a position on this pair. So yeah, here is your break and another break, but I don't get a setup on the 5-minute actually here a little bit. So with the 1-hourly there was a retracement back to here and another one to here. So on the, if you didn't take it on the 1-hourly, in the 5-minute you had it here, you still have to put the stop over the high on the 1-hourly at least, right? It's not a 5-minute entry, it's a hedge. You actually should not even put a stop in this case, because you're hedging up only one position. Only if you hedged up with 3 positions, like taking the first and second normally and then just leaving the third lot open, then of course you need to put a stop, at least for the first and second part. But yeah, Jean, I want to see your video, see what you did. So that's it. Let me share with you Kathy's chart as well. I don't know if you can see it yet. It should be visible right now. Can you all see that? Okay, so that's hedged my long position on the retracement using the 1-hourly 1, 2, 3. Then went down to the 5-minute, waited for 1, 2, 3 to enter short on 3 lots. So she actually took an intraday trade. Okay, an intraday trade on the 5-minute chart, the way I understand. And okay, the long is still 1 lot, My sell position hedged its target. Okay. Update, my long is still in and one lot of my sell position has reached its target. Okay. So that means that what she did actually is, let me go back to the 5-minute chart. She had a stop somewhere up here, right, which is really close, because the reason you hedge a position is to lock in profits, right? So if you take if you want to hedge a position, you can hedge it with the same amount you are long. Like if you have one position long, let's say just one mini lot or one standard lot, you hedge it up with the same size. If you only want to hedge it up and make money on the retracement, okay? Now if you actually want to hedge it up but also trade against the main trend, normally with an intraday trade, you could of course take 3 lots, manage the first and second as any trade, you know, a classic 1 to 3 trade, intraday trade on the 5-minute, but you leave the last lot open with the same size as the long, the hedge, right? The original long position. And what happens now, you lock in the profits from your big swing position. You also made the first and second profits on the first and second lot like a normal trade. And now you're not only hedging up a position, but you made extra profits from the other 2 lots, the 5-minute normal trade you took. Okay, do you understand what I mean, everybody? Okay, great. So actually having, if you do that, then you can of course just put a stop over the highs on the 1-hourly chart, as I said, to make sure you don't get stopped out like here that quick. Because yes, you want to make profits on the first and second lot, but in your mind you're actually hedging, right? So you don't want to stop of 5, 6, 7 pips or 10 pips or something that is just too close. So this is a stop of about 20, I think she has here, and that is already small, but it is over the highest point on this 1-hourly 1, 2, 3, and it's okay to hedge. Now looking at the chart, probably she made already the second lot, I'm not sure. If that's the case, the 1 lot is open, and now you actually want to remove the stop. I mean, you can leave it, actually, it's not a crime or something. In case the price moves up, kicks out the last position, she still keeps the profits from the second lot, right? Even if she didn't trail the stop here, what happens, she should not, or you should not trail it, because remember, you're hedging, and if the price reaches the stop, you lost the 20 pips here, but you already made 20 pips with the first lot, so you actually keep the profits from the second lot, the 40 pips. Okay, and if the price then continues up, your long is still open, and then you make more profits on the long. So whatever you do, actually, it doesn't matter, you still make profits. Now if the price retraces more and it's going to reach the 200 EMA, for instance, down here, which more or less would be the 36 EMA, remember, new targets, previous highs here, of course, but then actually closer to the 36, the touches up here. So if the price actually reaches this area and you make another, all in all, like 150 points plus the first and second lot, and it's bouncing on here, you get rid of the short, of course. You don't have to, or you trail the stop as you like, and then the long will start making profits again. Simple as that. Yeah, so you have to know if you want to hedge up just with one lot and lock in the existing profits, or if you also want to take a trade against the main trend with 3 lots, managing the first and second normally and then leaving the last lot open. Okay, and then you don't even have to trade on the stops, or you don't even need a stop actually, because it's hedged up. With other words, it could bounce on M. Let's say we have NFP non-farm payrolls, the price is somewhere down here. If you know that news are coming and you have a hedge, it's much better not to put a stop, because if the price is close to the stop, it might hit the stop and then again go down. So if you have, of course, if you have 3 positions, you need the stop. Okay. You could also put only stops for the first and second lot, like for 2 positions, and leave 1 position without a stop. And because it's a hedged position, you already have a position long. And that only in case you cannot watch or you have to go to sleep. Yeah, right, because it's in the middle of the night. But as I said, you can have the stop, or you can just trade without a stop for the remaining position at least. Yeah. And of course, if you have 3 positions, if you open the trade like here, if you don't open only 1 position but 3, then it's not only a hedged trade, it's a classic trade against the main trend in this case. And also then you have, of course, to put a stop, at least for the first and second lot. Makes sense, right? Okay, don't worry if it was a little bit too much at once. I have recorded it, so you can listen to it later on. The euro Australian dollar still waiting for this 1, 2, 3. Not much to say. Resistance is there. It's ranging. Okay. Cable retraced. It bounced on the 36, and now we still expect the move up or the lower high and then the move down. So still watching closely. Nothing happened here yet. Still long for now. We still have a lot of support, and there's no short scenario yet. Now CHF, USD CHF moved lower, of course, because the euro went up. And our creepy short position we were discussing last time, that didn't look nice. This one okay, but that one not. Is probably did reach the first lot and is slowly crawling actually lower. Okay, now it's trying to retrace. So we need a new setup before we do anything. If you're already short, you know what to do. Of course, the first entries, depending where you get your entries, you should be out with the first and second lot already anyway. GBP Canadian dollar. We still have the scenario. Gail said yesterday she wanted to hedge it up, so she could create a nice new video about hedging her position. But the thing didn't want to go. She said it's going up again, and she was kind of, to say it like simple, she was a little bit pissed because it didn't do that. And you see, that's the funny part. Some people are happy when they are long and they see, I don't know, 600, 700, 800 pips profit. And Gail was pissed because she wanted to hedge short, and the thing went her way still. So the trade is still making pips, and it sounded like she didn't like it. Yeah, exactly, actually. Poor Gail, right? She wanted to hedge the position, but it's still going her way. So yeah, it doesn't matter. Let it go 1,000 pips and then you hedge. Yeah, it's really a good problem, a nice problem to have. Yeah, then you just it's okay. You can have like we have here, subtitles under your video. You talk, we don't understand, but we can read then what you say. All right, it's a little bit more work, but it will be fun for us. Exactly, yeah, there we go. That helps always. GBP JPY. So actually, yeah, to discuss that, we'll see. You need the touch on the 36 and then this. Otherwise, at least this. Confirmed it would be like a 1 hourly here or 5 minute below there, of course. Yeah, Ouzo is not deadly, no. I mean, if you don't drink more than 2-3 bottles. Yeah, medicine, yeah. You wish. Okay. GBP JPY. Is anybody in the room right now who has still the long here? Did anybody hedge this up? I got a few emails, but I have to check who sent those. Let me check also the 1 hourly chart, see what happened here. Okay, there we go. So on the 4 hourly, now it's a very crucial point here. Okay, Edward is still long, that's great. And you see the price is at the 36 and trying to do something here. So it will be interesting to see what happens here. So what you want to do, or what you could do, is actually hedge the position up. Somebody sent a chart hedging this up already on the 1 hourly chart yesterday, or the day before yesterday, I think. So yesterday that happened, right? Yeah, so yesterday, no, it was okay yesterday. We had a hedge here with a target down here for now. So it's also okay if you have a good target. So the 36 in this, at that area here, was like 140 pips away. And the trader said, I want to hedge it up. I get the 1 hourly 1, 2, 3. If it really breaks, I hedge the long with a short, and then I target this area. And if it's bouncing here and it's going over the 36, I just get rid of the short. It would be a break even for the short, but it would also make profits again on the long. So again, locking in profits. So in case this actually breaks the 36, let's say we get a bounce on the 200 EMA, we'll probably get something like this, and you have a lot of resistance there. Then of course hedging it up here is the smart thing to do if you want to hedge. You don't have to hedge a position. You can just get rid of the trade. Remember, you don't have to fall in love with your existing position. Of course, it's great if you have a position running forever there, and if you get used to being a trade for many days or weeks, to close it is like always a little bit, you know, like, oh man, I have to close it now. But it really depends on your plan. And if your plan says, look, I'm expecting this and a bounce here, of course, then you can get rid of the trade if it looks short on the 4 hourly chart, and then wait for the retracement. And if it gives you another signal, you just go long again. You still made 1,000 pips here with the first and second and the third lot anyway, right? But if you say, no, I just want to see my long position in, I'll just hedge it up. It might not even go down to here, only retrace a little bit and then go up, and I don't want to risk, you know, being out of the trade, so I hedge it. It's really up to you if you want to do it or not. It's not a must. It's just a powerful, because if it goes down, then you make also pips on the retracement. So like I usually say, you milk the market also on the retracement. Okay. So Edward, what is your plan with your last position? What do you want to do with it? Are you going to hedge it? Or will you just manage it and then look for new entries? So you won't hedge it and you won't get rid of it. You will just leave it, even if it retraces back to here. Is that correct? Daily 36. So you just manage it on the daily chart like a classic trade. Which means if it goes against you about 500 points, you will just keep still the long and wait for that. Okay, that's another way to do it. It's not a problem. And it takes a lot of patience and also a strong mindset to see your profits actually for some time flying out of the window. It's like having, I don't know, the parrot, and you open the window and usually it comes back, right? And in case this happens, then your birdie comes back home. In case it doesn't, it goes down, then the birdie is lost. Okay, that's also it's also the way to do it. It's not a problem, and it's also a very good exercise for the mind. Yeah, you need a sub account, that's correct, or you open a broker. Actually, I heard that Dukascope in Switzerland allow US clients now, and they were at least a very good broker, and you can try it out. So this way you can hedge. Okay, great. Now the euro yen, same scenario. We're still waiting for that. It looks like it wants to go, but you see, on all these pairs, it's really not confirmed yet, right? It's confirmed when it really stays below after these lower highs, and here it's visible in the 1 hourly. You can see you still have the 200. It could also be it's playing around and then whoosh going up again. And then, yeah, same scenario here, and then we target, of course, support. 4 hour is still in making here. Price bounced. Nothing changed on the New Zealand dollar, US dollar. There we go. The Dow touched the 36, and we're waiting for this, and they're still waiting for those pairs. Actually, Tom sent over a chart. Let me see where that is. There we go. I don't know if you can see it. Probably not. Or yes, maybe yes. Let me check. Okay. You should be able to see it. So can you see it or not? Okay, great. So we had a 1 hourly late entry, price bounce on the 200 here. That is, if I'm not mistaken, GBP Aussie, right? GBP Australian dollar. And price moved up 150 and 300 pips, so like 450 pips for the first and second lot. 900 pips and running. So the last lot is in profit with 900 pips, and I see that you trade the stop to here, correct? Below that line in the 200 EMA on the 1 hourly chart. So well done. That's a very, very powerful trade, and it really went up and up and up. So well done, and please everybody, some support for Tom. He's in here, but his name is actually, I think, Kimonas, right? He's changing names every time he is in the room. So that's a wonderful trade. And 900 plus 300, 1,200, 1,450 pips if you would close it right now. Right, it's a really good trade. And we check the chart immediately, the live chart, GBP. Also, you see what happens there. Could you actually see it before? Okay, I make it quick. Again, okay, that's a 1 hourly chart, the GBP Australian dollar, and we actually had a daily 1, 2, 3, and you cannot see it on this chart, but Tom took 1 hourly 1, 2, 3, not easy to spot, and target 1 and target 2 with 150 and 300 pips are out. The last lot is about 900 pips in profit and still running. Okay, so it's a really good one. It's a small position, but you can see even with a mini lot, the last position makes good profits. Okay, it's 800 euros or dollars or whatever. Now, if you look at the chart, you'll see that it's still going up, right? Here is your 4 hourly 1, 2, 3 again. After the weekly 1, 2, 3, the daily 1, 2, 3, everything is pointing up. Yeah, you get your weekly 1, 2, 3, you get your daily 1, 2, 3, you have your crossover, you have your higher high. This high is higher than that one. A nice retracement. And then on the 4 hourly chart, as I said, it's difficult to spot. There were 4 hourly setups here. And then after that 4 hourly and daily and weekly, you get a tiny 1 hourly setup. Right, let me switch here, down here, right? Not easy to spot. So right now, if you check your 4 hourly chart, you see the price is still trying to move up. And if you measure, it's, as you said, it's probably over 900 already, right? It's reaching 1,000 soon. So that's great. Another 1,000 pip trade, and actually from so many of you, that's really encouraging also for everybody else. Yeah, a video would be great about this. Target 1.83 for now, but you know what, 36 is the guide. If that is holding, you just stay in with that long. Okay, yeah, 2.0. okay, it's okay. Look at the daily chart. You want to target this area. Yeah, resistance here at 198, but actually at 2.0. Why not? Why not? Let it go. That will take a couple of weeks, but it's okay. You will kind of manage it as a stock, right? Sometimes if we have a daily a trade on a daily chart, 4 hourly chart, entry or whatever, and we start looking at targets on the weekly chart, of course it will sometimes be like you have in a stock position and keep it for weeks or sometimes months or even a year or longer. So it turns into a classic, I don't know, day trade or small swing trade can easily turn into a very, very powerful position trade. Yeah, so yeah, great. Okay, that's actually it. We have, if I'm not mistaken, NFP tomorrow, right? So be careful. Don't trade before NFP, like 2-3 hours before if you do intraday trading. Now if you have swing positions running, then it doesn't matter actually. And if it looks like, you know, your swing positions are getting weak, then you start hedging up the position. You can even hedge it up during the news, and if it goes your way, you just get rid of the other position just to make sure it's not I don't know, exploding in one direction and you are not there or something. But other than that, I wouldn't worry. The chart already knows what's going on, so don't worry too much. So do we have any other pair we want to watch? Or is it okay? The Aussie cat, did we not do that? Sorry, did I forget? We had it somewhere here. Let me take a look. There we go. Okay. We still have the lines here from yesterday. So there was our another, the 1, 2, 3. Did you take a position here? Did you? I remember you said, Jean, you didn't take this, so you were looking for 4 hourly setup after this daily 1, 2, 3. Is that correct? Okay, so you have your 4 hour. Oh, okay, it's right now in making. It's a nice example. There we go. So you have your daily 1, 2, 3s, and you have another small 4 hourly 1, 2, 3, and it looks like a 2 to 3 line break. So if that candle is closing red, it's not like it looks perfect everywhere here because it's a little bit slow and lazy, but it is a 4 hourly 1, 2, 3. And if that's closing, then you actually have a short entry here soon. Stop over the high here at least, right? And targets, of course, should be first and second lot, 125 maybe. How big is the stop in case we get an like you have a 50 pip, 60 pip stop probably, or 70. So yeah, target 1 and 2, previous highs here from August. You should be okay, and more or less. And then of course an extension, the 94 area, 93, 60, 70, and down here 92 would be great if the price could go down to here with not much delay, right? So yeah, great, well done. So anybody who wants to trade this pair, the 4 hourly signal will be triggered probably soon if we get this break and the candle. Now it looks a little bit like a range down here, but I mean the daily looks okay. We have a 1, 2, 3, so it's a signal. It is a classic signal, no problem. Okay, what else? Any other pair? If not, we just stop for today. I will upload the video. I will also upload your trades later on today. We'll try to do it right now actually, so I won't forget it. And then we take an early weekend break already. Okay, perfect. So have a great day, and tomorrow also watch out for NFP, and I catch up with you next week. Okay, thanks. Bye.